Hello everybody, welcome back. So it's finally happened. We've managed to crack through the $46,000, $45,000 zone, and we're approaching the bottom area of this. Well, I'll have to say it. I mean, it is an accumulation zone, right? Until broken down below, that's where we get particularly bearish on this. But when we before this happened, we predicted the low 40,000s in a mega wick. As this happened, we predicted that this is going to be the range that gets played out, and now we're entering the bottom area of that range. So we shouldn't really be too scared about it. It's something that we've spoken about since before this drop and after this drop. So now that we've got this another leg down, it is what it is. So I suppose the most conservative traders for spot positions anyway, those who want to pick it up at lower prices, would probably want to wait and see what reaction we do have at between 41,000 tops to maybe 39,500 bottoms there. Now, wicks don't count, candle body closes do, and if we start to drop down into the upper 30,000s, I mean like below 39,000, and especially if we go below like 37,000, then yeah, it's definitely time to take time off and just chill out and relax and wait for this whole market to turn around, because it would imply potentially a longer period of consolidation with much lower prices. And obviously there'll be bounces along the way, but we're not there yet. We're still within the range that we determined a few weeks ago, before this drop, like a month ago basically. We said that this is likely to happen. It happened. When it happened, I said this is likely to be the range that we play in, and I suppose there's been a false sense of security over the last 4 weeks that we've stayed above this area. So now we're back into the low 40,000s. It's no big surprise. So what are we going to look at really? Other than this support, which is the main area that we're looking for, comes in line with these tops over here, these tops over here as well, and I suppose these supports over here. So $40,000 as a rough flat kind of number. Again, front run to an extent of maybe 41,000, wicks down below into the 39,000s, but generally 40,000 is the figure to watch for. If that holds, which I think it probably will. I think this is just another one of these consolidations. Again, in lines currently with higher highs and higher lows as we speak at the moment. Anyway, with this current value, that's how we're able to play this. In this bull run, this one's starting from 2019. The green 50 exponential has also been an area which usually in the previous bull runs has always held as support, but each year we have dipped down below it for sometimes about 3 to 5 weeks. Last year we only dipped below it with a candle body close on a weekly for a single week, and then we turned around. We could be looking at the same kind of behavior as this. So we had a nice big run, pulled back, everyone was calling bear market. It got a little squeaky bum time when we candle body closed a weekly below the 50 exponential, but going back throughout this last bull run, we established that it's an area of significance. Previous bull markets, we never went below it. This bull market, we've gone below it every year, even if it is just for a little piece of time. So I'm not particularly bearish on this overall. I would flip potentially quite significantly bearish if we started closing and pushing down this Bollinger Band on the weekly. That currently comes in at around 39,000. So if that starts to happen, we get candle body closes below 40,000. The weekly candles start stretching that Bollinger Band, further and further down, and especially crushing below the cloud, which is about 37,000. That would be pretty bad. I mean, we don't have a red portion on the cloud on the weekly at the moment. The Chiku span hasn't yet touched the price action, so this signal over here is still technically in play. I'm okay with it, to be honest with you. I know it sounds crazy, but for those who watch my channel will remember, because I reference it almost every video really, that the $40,000 area being the bottom of the accumulation zone is an area that we have on our radar. Something that we've expected, and so to see this happen, I suppose, doesn't take us by surprise. I suppose if you're just tuning in to me for the first time, you'd be like, bear market, what are you talking about? It's a bear market. We've gone down today. Can you not see? It's down today. Today is down. But I mean, really, that doesn't mean anything. I mean, we've plotted these areas out previously, and we've spoken about them previously. So to see them happen is, like I say, that's all part of the game, isn't it? We've expected it for at least 4 weeks, and now we've got it. So it's no big deal. You know what I mean? Absolutely no big deal. But I suppose it does. The lower we go, I suppose, the more emotional people will become, and the more frequent you will hear the bear market be called. And I dread to think what the fear and greed index looks like, but I imagine it's relatively low. I think a bottom is likely to be formed relatively soon, probably even from, I wouldn't say probably, but it wouldn't surprise me if we were front run the $40,000 zone and turned around like we did around here. So a big breakdown. Wicks held up to a certain level, took a leg down to the this is our major buy zone over here. This is where we anticipated the buy. That was the last time I bought Bitcoin, was here. Came down, essentially made a double bottom, launched and carried on. So it looks a little similar, to be honest with you, and it's still in keeping with the overall bullish trend, which is, you can see. You don't need me to explain this to you. You can see we've got high, lower high, higher high, high, high low, higher high, and potentially a higher low here. So it's still very much in keeping with an overall bullish trend, right? All that's happening here is giving people like you and me the opportunity to buy at established areas that we've plotted out, being this area here. Now, if this doesn't work out, it doesn't work out. Nothing is a perfect. There's no perfect trade. And I suppose the risk to reward around here is, it's not great, isn't it, really? In the short term, what do you expect Bitcoin to rally up to? In the short term, I mean, it is 50-50, but I use Bitcoin as like a trading tool, you see. So the more Bitcoin I have, the more I can put into altcoins for potential setups that basically will then go on to make me more Bitcoin. So Bitcoin is my balance, and so I would pick some more up around the $40,000. And in fact, I have a buy order around 40,600 just to front run it ever so slightly, just in case it comes down there. If it doesn't get hit, it doesn't get hit. It's no big deal. But there is a buy order down there, and if it fails, it fails. It's no big deal because one way that I choose to view the market is through the balance of the amount of Bitcoins that I own, right? So I have X amount of Bitcoin, and that Bitcoin amount will always stay the same. I put it into some trades sometimes here and there for altcoins, take profit into Bitcoin. My Bitcoin balance has increased, and so I suppose that's, for a spot trader, quite a healthy way to manage this market. Forgetting about what the overall value of a Bitcoin is, and just think about how many Bitcoins it is that you've accumulated and continue to accumulate, whether it's through trading or dollar cost averaging or whatever. Because I made a silly video yesterday on my Twitter. I don't know if anyone saw it, but if you just flick to a monthly, I suppose this doesn't do it any favors on the Binance chart because it's not a very old chart really, but even the weekly, let me just bring it up. Let's just have a quick look, or I'll show you. If you go to the Bitcoin chart on a daily, I mean, it's obviously pretty bullish when you zoom out. You go to a weekly, it's even more bullish. You go to a monthly, I mean, it's ridiculously bullish, and so the idea would be to accumulate all the way up. Now, thinking of the monthly over here, this is relatively concerning. We generally don't get too many of these, and we are approaching one now. But the month is still young. This can turn around quite quickly. This doesn't necessarily need to be bearish, and also it's crossing from a very high level, so it doesn't imply bear market on its own. When was the last time you got one of these? So we'll think about the bull market pop. 2017 into 18, we got one of these halfway down 6,400. We came down by another 50%. When else did we get one of these? Bull market started, peaked over here, basically market. This was the opposite, really. We got a MACD cross, on a bullish cross, basically at the peak. Then went down for a consolidation, and then got a negative cross, more or less marking the bottom, to be honest with you. If it then started to go up, and then we got the March crash, which is all to do with the old virus floating around. So MACDs are good. They're extremely lagging, obviously, on this time frame, and also from such a high level. I wouldn't get too concerned over something like that. But I just wanted to show you. I mean, this is the idea. I trade with Bitcoin to alts, back into Bitcoin, back into alts, back into Bitcoin, constant, and so the Bitcoin is my balance. Maybe you should try and think of the same. It might help you conquer your emotions, but I get it. If you're getting all bent out of shape by last night's price action. However, we did expect this area to get hit, and at the moment we've still not touched it. So it could get worse, and I'd still be perfectly fine with it. In fact, I welcome it because I have a buy order there. But overall, that's it. Right, so last night I didn't get to do the live stream. I might not be able to do it again. COVID has hit my house. I'm currently the only person without it, so basically means I'm a servant to everybody with it, and inevitably I think I am going to get it if I don't have it already. So I can still do videos, even if I'm ill. I'm pretty sure I'll still be able to do the videos. The live streams might be difficult until everybody is better again, because otherwise, I'm just going to have to be going to help everybody all the time. But other than that, let's just see and wait, see how we resolve this formation. If it resolves the way I think it will, this area will be the turnaround point, and that will be for the market overall. Right, I'll leave it with you there, guys. Hope you have a nice day. Take it easy.